in the world does anyone trade a 15-second chart of the E-mini S&P 500 futures? Here's a case study. Let me show you. So if you're new here, I'm Hema Reddy, and I use price, time, and momentum to boost my trading and that of my tribes. And I happen to use a 15-second chart to manage and implement my E-mini trades these days. So let's capture an example that happened right now today, Monday, September 11th, which happened to be the first date, the roll date for the E-mini S&P 500 December 2023 contract, okay? We'd been on September the past few months, and now we've moved to Z23. So if you're new to futures, keep in mind that futures aren't like a stock ticker that just lives forever. Okay? You have to be on a certain contract to make sure you're trading with the current liquidity and volume. All right. So let me give you the lowdown on how we take this 3-minute chart and analysis I had there and how I implement it on the 15-second chart. So I had been looking at the market going higher. I wrote about that in my skinny, and it did start the morning off higher, but it quickly turned lower. And the signals that appeared to me that emphasized that the market may drop, as it did, were threefold. So on the 3-minute chart, there were 3 reasons. Number 1 is this 50% retracement, okay? This is 50% of this giant move back from this 60-minute chart, right? So about 4540.38. So that was evidence number 1 when the market started stalling out there. Evidence piece number 2 was this forecast. So I just put like the X marks the spot, but those of you who have lost forecasting, you know how to draw the forecast. And that was an expectation to get up to 4541.75 by 9:45 a.m. The high ended up coming in earlier. Last but not least, on the 3-minute chart, there was a Harami candlestick that formed. And while the Harami candlestick is not anything specific to my trading style, the way I trade it and my nano twists are unique. So if you're interested in learning more about how I trade candlesticks with my GAN nano twists, keep an eye on your email for an event I'm doing here on Tuesday night. All right, so we have price and the retracement resistance, market timing here, and then price in the candlestick. And you might be thinking, well, Hema, you're missing momentum. Well, that's where the 15-second chart came in. So here's the move that's unfolded. Okay, market's still live and trading. But what I want to do is on the 15-second chart, I'm going to jump back in time to when all of this was unfolding and literally show you the trades I made. Okay, so I'll be there in the 15-second chart with you here in a moment. All right, so here's the 15-second chart. Again, every candlestick representing just 15 seconds of action on the E-mini S&P. And what I first started out my morning with was going short after getting close to and backing away from the 4540.38. So my short was at 4539.75. So a little bit earlier than I'd wanted, right? I had been eyeing the forecast up here, but I got trigger happy. Maybe it happens to you. And so I got short too early. So when I got short, here's that marker, okay, 4539.75. But I quickly realized, I got short at a price that was not optimal. And what happens, guys, is if you get into a position at a price that's more or less worse than what the better entry is, it can mess with your management of the trade, even if it ends up making you money. So something I do when this happens is I just get out the moment I realize. So what happened was the market kept going higher, and I was like, maybe I was short too early, but I was noticing momentum and how it was waning on the RSI power zones. So it kept going higher, and then I was like, you know what? I should have gone short back here. 4541.75, that was the forecast amount. That's the ideal entry. So I decided, instead of sitting with this trade and just hoping it comes lower, I'm gonna just take a small loss, get out, all right? So I got out of my short, took about $100 loss here. 2 points, $100. Then within milliseconds, like a flash of lightning, I was able to clearly reassess because I was out of the trade. Your head is clear when you're not in a trade, especially if that trade was not optimal. That's when I came back to the 3-minute chart, saw all the things I had just painted out for you, then saw that on the 15-second chart, we had even more bearish candles and even more waning momentum. So I had the confidence to re-enter short. So I re-entered short right where I had gotten out to clear my head. So now short from 4541.75 at 9:35 a.m. if you're following the chart. Okay, then I had to live through this. Retest of the highs. Doesn't feel good, but I didn't have any reason to get out, right? Because the high didn't break. And sure enough, market turned over. Ended up forming a multi-top on the 15-second chart. Then things started really fall down. And I said, you know what? This is falling harder than I expected it would. I was just doing this short to kind of have a chance to rebuy back here. But I'm going to make sure that I manage this trade so that the market takes me out. The market tells me when it wants to stop falling. So I have 2 contracts, and the first one I take off at 2 points because my stop for that first contract is 2 points. So I just want to make back what I have bet on the table. So the first entry, just exit, is just automatic. So I got out at 2 points profit. And guess what? That made me neutral for the day, right? So it kind of cleared my energy. I had a $100 loss here, $100 gain here, and I still short a contract from up here. Can you see the difference, guys, in the psychology of the chart? Being short from here, the quote unquote correct level, my original plan, as opposed to if I'd stayed short from here and gotten caught in the chop. Great. So what happened from there? Let me show you. I used the 15-second chart to manage the trade the whole way down. I just kept staring at the 15-second chart, moving my protective stop. I moved my protective stop 7 times. Yeah, that's right, 7 times every couple minutes when the data dictated it. And here's what ultimately unfolded. I stayed with the short here. I stayed with the short through all here. I stayed short that contract through here. I stayed short that contract through here, even all this mess, because per my stop management rules, stop was not hit. I stayed short all through this. Stayed short all through this. Yes. See, the market squeezed more juice out of the orange, and if I had come in and been so stubborn that, oh, the market's going to stop at X or Y level because it's a 60-minute support, I wouldn't have had the fruits of this labor. Finally, things started getting choppy around here, and per my approach, I got out here. So my exit was about a $500 trade on that second contract. From there, I saw the potential for the market to bottom and perhaps turn higher, but I said, you know what? I got my $500 in 30 minutes. My goal is 1,000. I got halfway. I'm good. I'm out. That's it, guys. It's not super complicated. It's relatively simple when you know my methods, but it's not easy to deploy out of the gate. That's why you need practice. That's why you need coaching. That's why you need to have the community to help you understand the techniques. All right. But I hope this helps because you've been asking for case studies of what exactly I'm doing on a 15-second chart. So I'll be sharing more of these, and here we are to start. And I'll catch you next time.